Many of you asked me to teach you how to treat liquidity grab with multiple time frame analysis. In this video, I will show you how to combine top-down analysis and smart money concepts for treating a liquidity grab on any forex pair. You will get a complete liquidity grab trading strategy with entry, stop loss, and target, and a real market example. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. In order to treat liquidity grab, first you should learn to identify the liquidity grab, and in order to identify the liquidity grab, you need to learn to find the liquidity zones. I do believe that daily time frame is the best time frame for the identification of the liquidity zones. So let's examine Euro New Zealand pair on a daily time frame and let's look for the significant liquidity zones. Traders, don't miss a big end of winter sale. For 1 week only, get a lifetime access to my premium group with a 40% discount. Inside you will get a lifetime access to my daily VIP live streams. You will get a video course and 2 books teaching you my trading strategies. And as a bonus, you will get a lifetime access to my VIP signals group. For more info, visit my website vasilytrader.com, the link in the description below. Don't miss your chance, traders. And when we look for the supply and demand zones, we simply look for the areas where a strong buying or selling activity occurred, where we saw a strong market supply or a strong demand. Take a look at that zone right here. It is a very perfect of a supply zone, of a liquidity zone where we saw a significant selling activity. You can see that many times in a row, strong bearish movements initiated from that zone. At the same time, we can see a significant demand zone right here. That demand zone was respected multiple times in the recent past, and we saw a strong buying activity within that zone. Once we identified the liquidity zones, we can look for liquidity grab. And looking for liquidity grab, you should look for the violation of a liquidity zone only with the tail, with the wick of a candle. The body should stay within this zone, while only the tail should be beyond the liquidity zone. That is a perfect example of a liquidity grab. Once we identify the liquidity grab, we can treat it. And in order to treat it properly, we will apply multiple time frame analysis. We will apply the combination of a daily and a 4-hour time frame for treating the liquidity grab. That is how the liquidity grab looks from a 4-hour time frame perspective. We can see a bunch of 4-hour candles, and the proper analysis of a liquidity grab on a 4-hour time frame will help us to get the best entry confirmation signal. And in order to understand the logic of treating the liquidity grab, let's study some important theory. With the liquidity grab, smart money are manipulating the market, and with the liquidity grab, they make the buyers, the traders who are buying from that demand zone, close their trading positions in a loss. At the same time, they induce the sellers to start selling. With that, they are trying to accumulate the market liquidity. And once you spotted a liquidity grab, and before you open a trading position, you will need a confirmation that the smart money are really manipulating the market and that they are really accumulating the buying orders. For that, study the price action on a 4-hour time frame. You should look for kind of a range, the so-called accumulation, bullish accumulation. You can see that here in the 4-hour time frame, the market is trading within a narrow range. And if our assumptions are correct, the smart money are manipulating the market here and they are accumulating the buying orders. The confirmation signal, the signal to buy, should be the clear sign of strength of the buyers. And the best confirmation here will be the breakout of that minor resistance, the resistance of that range. So far, we see a clear interest of the sellers to sell from that area, and we see strong bearish reactions from that. Bullish violation of that resistance will indicate that the smart money are finally pushing the prices higher. Your strong bullish signal will be a 4-hour candle close above the resistance of the range, and then you can place a buy limit order on a retest of a broken resistance of the range with the stop loss lying below the lows of the range. That will be your safe stop loss. The initial target for the trade should be the closest strong 4-hour resistance, and here we have such a resistance. It is going to be our first target for the trade. And if your trading terminal supports multiple targets, you can also trade that setup with multiple targets. And your second target will be the next strong resistance. Here it goes, and once the first target is reached, you move your stop loss to entry, you close half, and you anticipate a further bullish continuation. One more thing to add about that trading setup is that there's no guarantee that the market will violate the resistance of the range. If the price keeps accumulating within the range, and if we see the consequent violation of the support of the range, then the trading setup will be invalid, and most likely then the market will continue falling. I always say to my students that a single time frame analysis is not sufficient for profitable SMC trading. A proper combination of multiple time frames is the key to consistent profits. I hope that this trading strategy will help you. Let me know in the comment section if you have any questions. Also, traders, don't miss a big end of winter sale, 40% off on my premium group, VIP signals included. Also, traders, please watch my other videos.